All right. What is up, traders? What's up, tycoons? Super excited for today's video. I have 3 risky bank stocks to sell before they implode in 2023. All right, so I'm going to go over those stocks. We're going to dive into, why I feel this way about these stocks. And I'm also going to give you guys a trade idea. Now, I'm not in any short positions on any of these stocks at the moment, but I am contemplating them. Okay. Now, if we take a look, investors who have held bank stocks have been on a roller coaster since last month, especially with certain banks such as the Silicon Valley Bank and Silvergate Capital. However, big banks and their stocks haven't been spared the pain either. Many top tier banks having nearly a fifth of their market cap wiped out within 2 weeks. Some have even collapsed, like Credit Suisse. So we're going to dive into those. Make sure to smash the like button, subscribe to the channel if you guys are new. All right, before we go any further, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this YouTube channel are not registered financial advisors. Trading in stocks, bonds, commodities, or crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. And the 3 stocks in particular are going to be United Wholesale Mortgage, all right, First National of Nebraska, and also Silvergate. All right, so I'm going to dive into those. We're going to start off here with UWM Holdings. So some of the red flags on UWM is that rising interest rates have battered the demand for refinancing and mortgage companies are feeling the pinch. UWM stands for United Wholesale Mortgage. Another red flag is that they have become a loss-making company in Q4 with $62.5 million in losses. Its loan production income fell by more than 70%, and its net debt to equity ratio sits at an unusually high 304.5%. The next one, okay, was First National of Nebraska. Now, the provision for loan losses has been increasing by 187% to 136.2 million, while profits fell by a quarter. The Tier 1 capital also decreased by nearly 150 basis points. And, really in-depth information about this bank is unavailable on a quarterly basis, such as the amount of cash, short-term and long-term investments it has. So you don't really know what their balance sheet is looking like, especially with these treasuries. And that's really what caused the implosion of Silicon Valley Bank was their treasury investments, which is honestly pretty wild and an insane thing to be hearing that, banks are collapsing because they're investing poorly in treasuries. That's really, really wild. All right. And the last one, of course, is Silvergate. Now, this stock is essentially worthless as it represents a bank that plans to liquidate and shut down operations. The company failed to file its 10K annual form in time and received a non-compliance notice. It could also be delisted from the New York Stock Exchange as it does not meet the requirements anymore. Right now, this is the chart here for UWM. All right. And so one of the things that I'm looking at possibly is a bearish 5-wave impulsive structure right here. And this is via the Elliott wave. And so when you see these corrections, okay, so what I mean by a correction is your wave 2 and your wave 4. These typically will come to your Fibonacci retracement levels, right? The fibs are used to spot trend continuation versus trend reversals, right? So nothing moves in a straight line down or in a straight line up. You're going to move down, retracement, continuation lower, or move up, retracement, continuation higher. All right, and so we can see we got the move down, we retraced, and the 3 Fibonacci levels that I use are the 61.8, the 50%, and the 38.2. The reason being is that these are the 3 most common and well-respected Fibonacci levels, and so you can see we got just above the 50% level, and then we continued that downtrend for our wave 3. Now, wave 3 is going to be the largest wave out of your 5 waves, and that's aligning pretty well here. And to me, it seems like we got our wave 4 correction, and we're in that process right now. Now, corrective waves tend to be an ABC structure, right? So A up, B down, a C up. And if you take a look, we currently just got above our 38.2% retracement level. So there is still a possibility it could go higher, definitely, okay, up to 693 and also 789. There's been lots of optimism surrounding the stock, but I just gave you guys a couple red flags that I think are a little bit concerning, right? If we zoom in a little bit more, okay, we can take a look, and this is that ABC correction right here. And you can see that we just closed above that 38.2% retracement level. If you take a look at your MACD though, look at this peak that we have on our MACD right here, right? So we peaked out over here, and then we saw a very sharp decline afterwards in the price of the stock, right? We saw a big move to the downside after that peak in the MACD. And if we take a look at your relative strength index, we're also at another peak right here, right? So if you take a look, right here, we're hitting these previous peaks that we hit on our indicators before we saw a pullback. So, I'm going to be paying close attention to this stock right now. All right, there's lots of analyst upgrades and a lot of optimism surrounding the stock right now. It's actually, a lot of analysts are very bullish on it. But as I mentioned, I think that there are a couple red flags. Okay, so if this is the top, or we're trying to form the top of our C wave correction wave here, okay, then we're going to look for it to start to consolidate. And what we want to see is it actually break these trend lines right here. So notice these purple trend lines that we have. This is actually a chart pattern known as a bump and run, right? So if you take a look here, this is the bump and run pattern, okay? And it's indicated by this prevailing uptrend you have. And then you get a bump up in the price and you get a new uptrend. And then once you break that, you end up going all the way back down to where the prevailing uptrend began, right? And so that's definitely a possibility that we could see. If you take a look, we perfectly have that pattern. We have the prevailing uptrend, then we got the bump. And if we do come down and break through these trend lines, there's a very strong chance that this stock could potentially head as low as the $3.50 price range, right? So that's something that I'm going to be paying lots of attention to. If you take a look, we also have something known as bearish divergence. So I already highlighted the circles here on the MACD and the RSI, but I want you guys to take a look for yourselves, right? We have a high right here, and then we have a higher high right here. So clearly the stock is in an uptrend, right? It's making higher highs. But if you take a look at the same exact points on your RSI and your MACD, we have a high, and then we have an equal high right here. And then on the RSI, we have a high and we have an equal high. So this is a term known as slight bearish divergence. Okay, because the stock is making higher highs in an uptrend, but the relative strength index is remaining flat, essentially, right? It's not creating higher highs. We haven't seen any increase in the relative strength of this stock, and we haven't really seen the MACD make any higher highs as well. So that is a simple term known as slight bearish divergence. You combine that together with all of the different things that I'm showing you guys, ABC correction, bump and run pattern. If this thing starts to fall, this could potentially be a really nice short play. Now, of course, as I mentioned in the video, none of this is financial advice. All right, if we take a look, these are just some images of the Elliott waves and how you understand, right? An ABC wave is the correction phase, right? You get an impulsive move, then you get a correction, impulse, then a correction, impulse, then a correction. Okay, and if you take a look here, you see you get an ABC move to the upside. This is your correction wave. All right, this is how basically the Elliott waves work. So hopefully you guys enjoyed this video. Actually, no, I do have some more other things to show you real quick. False alarm. We have the open interest, right? And so what this is looking at is the option chain data. Okay, now this is the May 19th expiration, and look at the open interest for the $3 strike price in May 19th. Remember, I told you guys that this stock, if that pattern plays out, it could go as low as $3. And what we're seeing is that the most concentrated amount of bets on the option chain is at the $3 strike price for the puts, betting essentially that the stock is going to be $3 or below by May 19th of 2023. Very, very aggressive when you think that the stock is, basically at $6 right now. Basically betting that the stock is going to fall about 50% in a matter of weeks. Now, if we take a look at the next one here, this is the August 18th. And what we can see here, the green represents call options, right? And so we see a huge amount of volume here, or open interest rather, on the $6 strike, but we're already there. So to me, the way I interpret this is I look here at the $5 and I look here at the $4, and these three strikes is really where all of the open interest is concentrated at. And it makes a lot of sense for me to see some type of a pullback, right? And then perhaps later in the year, around August 18th, maybe then we come back and try to reclaim this $6 territory. I really wouldn't be surprised if a lot of these start selling, as these are basically in the money, or very close to being in the money, and probably seeing some decent profits if investors got in around that $3 price range. So that's really my thoughts and data surrounding these three banks. I gave you guys a trade idea on UWMC, United Wholesale Mortgage. Also went over some of the red flags there. Thank you guys for watching. I really appreciate it. Make sure to like and subscribe. All right. And also feel free to shoot me an email, ZachlyTrades@gmail.com. Okay. I do one-on-one sessions for coaching sessions, or if you guys, would like me to do some technical analysis on some stocks that you guys are paying attention to, and you want to see, what kind of signals do I see, any divergences, any chart patterns, any things like that. Again, feel free to email me, ZachlyTrades@gmail.com.